because we want to break down the Charles Schwab April STAX report. How are you feeling in the month of April? Let's hear how the folks were feeling, the folks who trade with Charles Schwab. Joe Mazzola, head trading derivatives strategist. Charles Schwab here with me on set. So glad you are here.
Third time to charm.
It really is obvious that there was some outflow.
Yeah.
People were nervous, understandably. April was tough, right?
April was one of those months where they chopped you up pretty good, right? I mean, if you came in over levered, you chose to reduce some of that leverage. That was something that we saw. In terms of kind of margins, what happened. I look at a day like, say, April 7th, right, where we had that big sell-off, the capitulation, everything's down, and normally what you would see at something like this is you would see a rotation from equities into like fixed income, mutual funds, things like that. We actually saw outflows into those as well. So what that means on a day like that is that you hit the sell button, you sell what you can, and that's kind of what we saw happen. Now, I will say this, if you look overall, right, at the entirety of that period, and this period for STAX, Schwab Trading Activity Index, ends April 25th. So we have the data through that. So there could have been some additional buying at the end of the month. But the big takeaway was this, Nicole, is that it was down 15% month over month, or 14.85, close enough.
Right.
That's the biggest drop we've seen since March 2020. So we're talking all the way back to the beginning of COVID in terms of the reaction function that we saw from the selling during that time period.
Right. So this drop was from the December number, right? From the 48.36 of December?
From March, sorry.
Oh, from March.
From March,
okay.
right.
So, and we're at 41.18. So just 1 month,
just
really, it's evident. That being said, now, you saw folks, you said they pivoted and sold options the rest of the month.
Yeah.
Premiums were high. Some folks were going into fixed income and ETFs. I mean, tell me about some of I do want to, we'll tell you what they were buying and selling, but, just on the trends that you saw.
So I thought that was really interesting. So one of the things that we kind of talk about from whether it's on, your show on the Schwab Network or what we do from an education standpoint is we say, look, volatility is going to be abound in the market, especially when you see it, a move like that. Learn how to harness it. Learn how to optimize it, take advantage of it, and that's kind of what we saw. So we saw buying activity in terms of volatility, in terms of hedges, kind of heading into that 7th and 8th date in April. We got the big move up on April 9th, right? You remember where we kind of put the bottom in and had that 9% intraday move to kind of settle at the highs. And then we really started to see clients start to sell options, selling spreads, selling puts, just kind of ways to harness some of the volatility, take advantage of the fact that the VIX hit a 60 handle and then kind of made its way back down to where we're at right now. But really intuitive for clients to kind of pull the trigger on that type of trade.
April was a month that I think we'll talk about for a long time, because everything went beyond the ranges that we were used to, right? Things were, VIX was surging. You saw people making moves, the treasuries, people were worried about them selling treasuries. There was, gold was on the move, and what were they selling? Did they have margin calls? There were, then there was short covering. It was a wild month, but there's certainly this feeling now, it's so different now than it was. I mean, you're on your possible 10th day of gains. I mean, we won't know until the closing bell. Let's talk about what they were buying. And let's say Mag 7 was back in favor a bit, right?
So I think what happens is when, there's this tremendous amount of volatility, indecision in what's going to happen, you go back to what you know, right? And I think that's what we saw, whether it was NVIDIA, Amazon,
and valuation.
Tesla,
those things were beaten down.
Absolutely. Think about it. NVIDIA had gone back from $145 down to around $85.90. And so, back where we're at right now, we're around 120 or so. Nice buy. It was a good opportunity to do that. Amazon had pulled back, Tesla had pulled back. You were seeing 10 or 15% moves within a matter of a couple of days. Now, what they sold, which was interesting, is these to me seem like more like macro stories as opposed to the NVIDIA, Amazon, Tesla, where you saw good entry points because of the pullbacks. So think about it, Alibaba, right? That was the number one sell that we saw. Really, you can kind of tie that back to the tariff wars that we've had with China and concerns that companies like Alibaba, would not be able to compete as well in the U.S. markets, right? Same thing, MicroStrategy, really just you can make that trade in relation to some of the volatility that we saw within Bitcoin, and then Boeing. Boeing, I think traders might have missed the boat on this one because Boeing had pulled back quite a bit. Earnings come out. basically back to where it was, prior Liberation Day. So, that would have been one where, you didn't see the buying activities, a little bit more selling. One thing I will say was interesting, though, is normally when we run like our top 10 buys and our top 10 sells, I usually share, 3 to 5 with you, whatever,
sure.
right? But on the top 10, there's usually 1 or 2 ETFs that hit that list. This time there was 4. So basically what, my takeaway from that is you either bought that small sliver of what you knew, right? Those Mag 7 names, or you diversified into a wide swath of ETFs. They weren't really cherry picking on some of the other names outside of maybe that little sliver or that wide basket. That was kind of what they were doing.
Yeah, and MicroStrategy had to sort of redo numbers, right? So it wasn't even just the fact that Bitcoin. There was a point where Bitcoin did drop below 80,000.
Yeah.
I remember sort of one day saying that, but they've also had to sort of re-represent how they're doing their numbers, and then they came out, and so this was a darling. So some people were probably like, I want out, you know what I mean? When you think about the sentiment, do we have any sort of information on that?
So I would look at that particularly. I mean, to me, this is a sentiment indicator, right?
Yeah, it is, right?
I mean, this is a sentiment. It kind of gives you an idea of whether, clients were stepping in to buy the dip. I think what was different about April from a sentiment standpoint is that, yes, there was buying on the dip. We saw that on April 7th. And actually, if you look at kind of equity ETF inflows as a whole, not just from Charles Schwab, but from the rest of the market, you saw a lot of activity that week. A lot of that buying interest really kind of faded into the end of the month. And so that to me is interesting because, earlier you and I kind of talked about like inflection points, right? And what that might mean. That's why I wonder where, how much more room this rally has to go, because it does seem that there's not as much conviction now. A lot of that conviction was already kind of pulled into those first, 2 weeks worth of buying following that April 7th. And then, we've just kind of really seen things trickle ever since.
And things were happening at the same time.
Sure.
For example, Huawei started to ramp up their production of their chips to compete with the H100 NVIDIA chips to try and fill in the holes. One man's bad day is a good day for another. At the same time, there's just the big story of these Mag 7 names that they are advanced and the leaders and running the show. When I think about the S&P 500 50-day moving average, the 200-day, you're watching those closely, and folks were getting things at a better price. I wonder what they'll be looking for now going forward, because they have the VIX at least in their favor right now.
Yeah, so I would say this. A couple things to concentrate on would be this. We've got 200-day moving average. We're not that far away, maybe 70, 80 points away from that in the S&P 500. The VIX, if it can stay around 20, maybe a little bit below, that probably gives you a little bit more, juice for another move up. But ultimately, it's still going to come down to macro data and whether or not any deals get done, because things can turn on a dime just like that, as we saw back in the second week of April. Yeah,
without a doubt. And that GDP print, we've gotten in so many pieces that were something we're going to be talking about for a long time. Joe Mazzola, thank you so much for your insight into this. This is proprietary data of all the folks that are trading. It really gives you the sentiment of how people are feeling, and there was definitely some nervousness and volatility in this market. Joe Mazzola, head trading derivative strategist at Charles Schwab.